Kevin O'Leary loves to say your $5 latte is the reason you're not a millionaire. And for years, people clapped, nodded, and felt guilty every time they touched a coffee cup. But in 2020, that advice isn't just outdated, it's dangerous. Because if you think skipping coffee is going to save you, you've already lost the game. Let me be brutally honest with you. If you're broke right now, it's not because of Lay's, Netflix, or avocado toast. It's because you were never taught how money actually grows at the beginning. Here's the part nobody wants to admit. Saving pennies does not create wealth, especially when inflation eats your savings alive and wages barely move. You could cut every small expense in your life, coffee, eating out, subscriptions, and you'd still be broke 5 years from now. Why? Because poverty isn't caused by spending habits. It's caused by low leverage decisions. Kevin O'Leary made his money after he already had capital, access, and scale. You don't. So copying millionaire advice while having beginner money is like using jet fuel on a bicycle. It doesn't work. And worse, it distracts you from what actually matters. The real question isn't, how do I save $5? The real question is, where do I deploy my first $100 so it can multiply my income? Because the first $100 you deploy correctly is worth more than the first $10,000 you save incorrectly. That's the part nobody tells you. In 2026, the game has changed. Money no longer rewards patience alone. It rewards strategy, positioning, and execution. If you're still broke, it's not the coffee. It's not the economy. It's not even bad luck. It's the fact that no one ever showed you how to turn small money into leverage. And that's exactly what I'm about to do. Not theory, not motivation, not one-day advice. I'm going to break down how people are taking their first $100 and using it to build income streams, skills, and systems that compound, not slowly, but aggressively. This isn't about being cheap. It's about being smart. Because rich people don't obsess over what they spend. They obsess over where they deploy, and once you understand that, you'll never look at money or that $5 latte the same way again. Kevin O'Leary isn't lying to you, but he's not talking to you either. That's the problem. When a multimillionaire tells you to stop spending, he's speaking from a position of abundance, not survival. He already has capital working for him 24/7. You don't. And pretending you're playing the same game is the fastest way to stay stuck. Here's the dangerous part about celebrity money advice. It sounds responsible. It feels disciplined. And it quietly programs you with a scarcity mindset. You start believing the goal is to spend less instead of earn more, to protect money instead of deploying it, to hide your $100 instead of forcing it to work. Being cheap is not an investment strategy. Rich people don't win by hoarding cash. They win by multiplying it. They use money as a tool, not a trophy. Saving is what you do to preserve wealth, not to create it. And when beginners follow billionaire advice, something destructive happens. They stop taking intelligent risks. They stop investing in skills. They stop experimenting. They stop moving. They become proud of how little they spend, while their income stays the same. That's how people stay broke for decades. Let's talk reality. If you take your $100 and put it in a jar, it feels safe. But by December 2026, inflation will quietly rip value out of it. Not dramatically, not loudly, slowly, invisibly. You won't feel it until you realize your money buys less, does less, and grows into nothing. That's not discipline. That's decay. Kevin O'Leary can afford to say don't spend because his money is already deployed in companies, equities, royalties, and systems that generate more money while he sleeps. You don't have that luxury yet. At your level, money sitting still is money dying. The real danger of celebrity advice isn't that it's wrong. It's that it's context-free. It ignores where you're starting from. It ignores leverage. It ignores the phase of the game you're actually in. You don't escape poverty by shrinking your life. You escape poverty by expanding your capability, and that requires spending intentionally, strategically, and aggressively on things that increase your earning power. If all you ever do is save your first $100, you'll protect it. But you'll never multiply it. And in today's economy, protection without growth isn't safety. It's just a slower way to fall behind. Let me tell you the real reason most people stay poor. And it has nothing to do with intelligence, luck, or effort. It's how they think about their first $100. Poor and rich people don't differ in dreams. They differ in deployment. Give a poor person $100 and the instinct is emotional. They buy relief, comfort, status, a pair of shoes that looks like success today and is worth $10 in 2 years. The money is gone. The feeling is temporary. The cycle repeats. Give a rich person $100 and the instinct is mechanical. They ask one question: how does this come back to me? Not once, but repeatedly. That's the mindset gap nobody explains properly. Poor money decisions are about consumption. Rich money decisions are about conversion. One converts cash into comfort. The other converts cash into capability. This is why two people can earn the same income for 10 years and end up in completely different places. One keeps waiting, the other keeps deploying. Here's the dangerous lie you've been told your entire life: I'll start when I have more money. That sentence alone has kept millions of people financially trapped. Because more money never comes first. Leverage comes first. And leverage is built with what you already have: skills, time, attention, and yes, even $100. Waiting for enough money is how poor people delay responsibility. Rich people don't wait. They start ugly, small, imperfect. They understand something critical. Your first $100 isn't supposed to make you rich. It's supposed to change how you think. When you spend $100 on shoes, you train your brain to consume. When you spend $100 on a skill, a tool, or access, you train your brain to build. That mental rewiring is everything. Because once you see money as a seed instead of a reward, the entire game changes. Let's be clear about something uncomfortable. Being poor is expensive, not because of prices, but because of decisions. Poor decisions trade long-term upside for short-term relief. Rich decisions delay comfort to create momentum, and momentum compounds faster than money ever will. The wealthy don't. Magically have better opportunities. They simply treat money like an employee instead of a souvenir. They don't ask, can I afford this? They ask, will this pay me back? And if the answer is no, they walk away. That's the discipline you're missing. Not discipline in saving, discipline in deployment. If you're still poor today, it's not because you don't earn enough. It's because every dollar you touch leaves your life instead of staying to work. You don't need a raise to fix that. You need a rule. Every dollar must either increase my income, increase my skill, increase my leverage. If it doesn't do one of those three things, it's consumption. And consumption is where wealth goes to die. Here's the truth. Most people aren't ready to hear. $100 is all you need to start playing the real game. Not because $100 is powerful, but because starting rewires your behavior. The biggest mistake you're making right now isn't spending too much. It's waiting. Waiting for confidence, waiting for clarity, waiting for permission, waiting for enough money. But money doesn't reward waiting, it rewards movement. And the moment you stop treating $100 like nothing and start treating it like a tool, you stop being poor long before your bank account proves it. Kevin O'Leary will tell you to save your parents, will tell you to cut expenses. Social media financial gurus will tell you to wait until you have enough. And if you follow any of them, you'll be broke in 2026. The truth is brutal. Your first $100 is not for saving. It's not for comfort. It's for deployment. It's your first play. And the faster you play it correctly, the faster your money stops controlling you and you start controlling it. Here's the blueprint. Not theory, not motivation, not vague advice. This is actionable. 2026 ready strategy for the first $100 you ever deploy into wealth building. We're going to split it. 40, 30, 30, 33 streams. 3 purposes, 1 goal, growth. Let's start with the first $40. $40 into index funds. Yes. Index funds. Yes. I know, boring. Safe. Not sexy, but that's the point. This is your foundation, your base, your rock. Why index funds? Because they're time tested. They capture the growth of the entire market, not one company, not one hype crypto token. The entire economy historically delivering 7 to 10% returns per year. In 2026, options like VOO or VTIA are perfect. Vanguard ETFs that track the S&P 500 or the total stock market. Fractional shares are your friend. You don't need $1,000. You need $40. $40 isn't going to make you rich overnight. It's not supposed to. Its purpose is to anchor your portfolio psychologically and strategically. You're training yourself to invest consistently, to automate, to let the market do its work while you focus on skill building. This $40 is your safe base. It's your foundation. It's where your money sits while the other $60 works harder. But don't underestimate its power. Compounding is relentless. In 10 years, that $40 isn't just $40. It's proof of discipline, proof of strategy, proof that you can grow money over time. Next, we take $30 and deploy it into 2026 tech and AI opportunities. Stop thinking about single stocks like Tesla or Nvidia and expecting a miracle. In 2026, the tech landscape is fragmented. AI, machine learning, robotics, cloud infrastructure, and biotech are the engines driving growth. You can invest in fractional shares of companies that are literally building the future. Why $30? Because at this stage, you're speculating intelligently, not gambling blindly. You're exposing yourself to growth sectors that could double, triple, or more. But you're not putting all your eggs in one basket. Risk management starts small. Learn to pick winners on a micro scale. Track them, study them. Understand how AI companies are monetizing their products, how biotech startups move from research to FDA approval, and which cloud infrastructure companies dominate the backbone of the digital economy. Every $30 you deploy here is a lesson as much as an investment. You'll learn volatility, cycles, and risk appetite without risking your life savings. You'll feel the markets. You'll understand trends. And by the time you have $1,000, $5,000, or $10,000 to deploy, you'll already know what works and what doesn't. Now, the last $30, arguably the most important, goes into yourself. Books, courses, specialized tools, subscriptions, whatever directly improves your skill stack. I cannot stress this enough. In 2026, the best ROI is your own skill. It compounds faster than any stock, faster than any index fund, faster than AI hype. Because money follows value, and value starts in your head. Pick a skill that moves you toward income. Coding, copywriting, digital marketing, AI automation, video editing, sales, negotiation, financial analysis. Pick one and immerse yourself. Buy a book, pay for a micro course, buy a tool that helps you practice. That $30 is not an expense. It's an asset. The beauty of this approach is its multiplicative effect. $40 in the index fund grows slowly but steadily. $30 in tech AI grows potentially explosively. $30 in yourself grows immediately, increasing your earning potential exponentially. That's leverage. That's intelligence. That's strategy. And here's the brutal part most people miss. You don't need enough money to start. You don't need $1,000, $5,000, or $10,000. $100 is all you need. Done correctly, deployed correctly, and repeated consistently, it teaches you discipline, timing, and leverage. Deploy $40 consistently into the market, even $40 a month. Deploy $30 into high growth sectors, even if it's a tiny fractional share. Deploy $30 into yourself consistently, even if it's a short online course. Do this for 12 months and you've spent $1,200. But here's the kicker. By the end of that year, your money doesn't just sit there. It's grown. You've grown. You understand risk. You understand compounding. You understand tech trends. And more importantly, you're no longer waiting for permission or perfect conditions. You are actively building wealth, skill, and opportunity. The first $100 isn't just money. It's training wheels for your financial life. And the earlier you start, the faster you graduate to $500, $1,000, and beyond. Each deployment becoming smarter, faster, and more aggressive. Remember, $40 into the market, $30 into future tech, $30 into yourself. 3 streams, 3 rules. 1 goal leverage. Ignore the $5 lay obsession. Ignore the celebrity advice to hoard. Ignore the wait until you have enough trap. Your first $100, if used correctly, teaches more than $1,000 in a savings account ever could. Because by the time you've executed this blueprint once, twice, 3 times, you're no longer a beginner. You're a player. And players don't ask permission. Players don't wait. Players multiply. So here's the final warning. Every day you delay, your $100 dies a little bit. Inflation bites. Opportunity passes. Knowledge fades. Start now. Deploy smart. Compete aggressively. And by the end of 2026, that $100 won't just be a dollar figure. It'll be proof you can win at money even with almost nothing to start. Because wealth in 2026 isn't about luck. It's about strategic deployment. And that's exactly what this blueprint teaches. Stop. Before you spend another dime, you need to hear this. The first rule of starting to build real wealth in 2020. Don't waste your money on things that disappear faster than they appear. Here's what I mean. Number 1, fast fashion and hype clothes. Yes, that trendy jacket, those limited edition sneakers, the Instagram-worthy outfit, they look cool now. They make you feel rich for a minute. But the reality, you'll lose 90% of that value the second you walk out the store. Clothes don't appreciate. Status symbols don't appreciate. They're the perfect example of money going in and never coming back. Every hype purchase is a tiny tax on your future. And when you're starting with less than $10,000, you cannot afford that. Number 2, new cars bought on debt. A new car is a luxury. Most people think they need to look successful. They finance it, take on monthly payments, and pay interest that would make a banker blush. Let me be clear, new cars are a wealth killer. As soon as you drive off the lot, the value drops by thousands. And the interest payments, they ensure you're working not to build your life, but to pay off a depreciating asset. If you want financial freedom, you cannot be trapped in the interest trap. Avoid new cars until you have capital to buy without debt. If you're starting small, the goal is deployment and growth, not appearances. Number 3, get-rich-quick crypto schemes. Yes, I said it. Meme coins, hype tokens, AI-branded crypto with no utility. The internet is full of them. People post screenshots of overnight gains, and you think it's easy. It's not. Most of these coins have no intrinsic value, no product, no adoption, no plan. They are gambling dressed as investing. And gambling is the fastest way to erase your first $100. Crypto isn't bad. But blind speculation without understanding utility is suicide for your first deployments. If you want exposure, start with established projects, fractional shares of tech stocks, or learning the ecosystem, not chasing hype and hope. So let me summarize fast fashion. A 90% loss in minutes. New cars on debt. Interest traps you in mediocrity. Get rich quick crypto. A gamble that could erase your growth before it starts. You want to grow wealth in 2026? Avoid these. Protect your capital. Respect the first $100 you have. Deploy it. Multiply it. Learn from it. Your money is your weapon. Don't give it away to things that die, depreciate, or disappear overnight. Do this and you'll start thinking like the rich, not like everyone else chasing temporary. Satisfactory 2026 is not a year to sit on the sidelines. It's the year of the smart investor, the person who understands leverage, execution, and timing. Stop listening to billionaires who forgot what it's like to have nothing. Kevin O'Leary, while brilliant, will never teach you how to turn your first $100 into momentum. That's because he started with millions. You start with $100, and that changes everything. This is your challenge. Deploy your first $100 strategically this month. Don't waste it. Don't spend it on clothes, new cars, or meme coins. Split it. $40 in a safe base like index funds. $30 in 2026 tech or AI fractional shares. $30 in yourself, a course, a book, a tool that upgrades your skill stack. Yes, it's small, but small is powerful when executed consistently. This is not a game of luck. This is a game of discipline, leverage, and mindset. Here's the brutal truth. Most people never take action. They think $100 isn't enough. They wait for more money or the right time, That time is a myth. Waiting doesn't make you rich. Acting does. So here's your call. Start now. Not tomorrow. Not next week. Not when the economy feels perfect. Today. Deploy your $100. Learn from it. Multiply it. Repeat it. And here's the engagement challenge for you. Comment start below if you are investing your first $100 this month. I want to see who is serious, who is willing to move, while everyone else hesitates. Subscribe to the channel for weekly 2026 wealth updates, strategies, and brutal lessons the billionaires won't tell you. Your first $100 isn't just money. It's your ticket to financial awareness, execution, and momentum. Make 2026 the year you stop dreaming and start doing. Because the market doesn't reward thoughtfulness. It rewards action. Comment start. Deploy your $100. And let's make this your first step toward wealth that actually works.